But like I was telling you before this conversation with Mr. Surendra Mohan, what catches our eye is the performance of Arvind, and Mr. Sanjay Lalbhai is with us. Thank you very much, Mr. Lalbhai, and sorry for kept you waiting a bit. Can you take us through the numbers? It is a very good 26% growth in revenues that you have reported. Is this a maintainable run rate?
Well, I think we are confident about 20%. Anything over that would be a bonus. So that's the kind of plan which we have for the next year. And all our businesses, if you can see, are performing well. So we are pretty confident that we should be doing well going into the next year.
Okay. Mr. Lalbhai, good morning. You have a 10 to 15% volume growth guidance that you had given us for FY15. Given the kind of, stellar run rate that you've seen up until now, do you think there's a possibility of you scaling up that volume guidance?
I think, because textiles is and brands and retail also, both are cyclical businesses to the extent that, it will depend on the market and market condition. So to give a higher guidance sitting in January would not be right. But we are very confident that we should be able to outperform the kind of guidance which we have given. But we would like to stick to around 14 to 15% is what we have already conveyed.
Can you give us some color about demand from global markets? There are two issues that's going positive for Indian exporters. There is a bit of recovery in the European and the US markets as well. You have some support coming in from the currency. How are export markets looking, and how would you gauge them in the next 12 months?
I think we are very confident about exports. As you rightly said, that American and European markets are getting stronger. The economies are getting stronger. So there is a very good demand coming from these two continents, and the rupee is also helping. Along with the rupee, of course, the other costs are going up. Cotton is up by 10%, so the real benefit of a lower rupee may not accrue, but it's definitely helping compared to the Chinese competitiveness. India is poised well, and as a result, I think exports are likely to do pretty well going into the next year.
The last time when you had joined us, Mr. Lalbhai, we had our guest editor here in the studio, and you were explaining to us how because of the issues in Bangladesh, India is actually benefiting from that, the labor trouble that Bangladesh is going through. How much of incremental exports would one have to factor because of the labor trouble that we are seeing in Bangladesh and the opportunity in effect that India gets?
See, as I was explaining last time, that you need to set up newer capacity in garmenting. So garmenting is really benefiting because of the kind of problems Bangladesh is going through. And the idle capacity which was there in garmenting is started getting operationalized in India. And as a result, if you can see that our exports are growing by 15 to 20% in the garment sector. So this is likely to continue, and I think all the companies which are not doing well have started doing extremely well, and there would be a fair amount of increase in capacity also. So I am confident that next year the total exports should grow by 15 to 20%. The major growth areas are, of course, cotton exports, yarn exports, and garment exports.
Okay. Well, Mr. Lalbhai, you all just a few days back tied up with US Polo Association. What is in it for Arvind? Will you all be merely distributors, or do you see this association growing into something more like you producing goods for them?
US Polo?
Haven't you all tied up with for distribution of their products? Okay, I'm sorry.
No, US Polo is with us for the last 5 years, and it's the fastest growing brand in our portfolio. We are outperforming the market also. The EBITDA margin on US Polo is 19%, and if you were to look at the entire kind of landscape in the apparel branded segment, then US Polo is one of the outperforming brands. So we are doing extremely well. It's growing at 45% and at 19% EBITDA. So it's one of the star performers in our brand portfolio.
You're not increasing your association with them in any fashion?
No, I think we have a perpetual license on US Polo for India and the Asian countries, and so that agreement would continue. And all that we would do is launch newer categories. So US Polo is going into undergarments. US Polo has come out with the children's line. So we are extending the lifestyle brand. So that is all that we would be doing.
Okay.
I think our association, our agreement is quite comprehensive with US Polo.
All right, just one final question from my end then. Your brand and retail segment, the margins have increased about 160 basis points year on year this time,
right,
to 8.2%. Can you just give us a ballpark estimate of how much this segment will grow and how much will it contribute to your overall margin profile? So I'm trying to understand whether BNR will see double-digit margins anytime soon, and that will in effect get your overall margin profile to above 15%.
You are absolutely right. We would next year plan to grow in double digits, our EBITDA margin, get into a double digit number, and it's growing by 30%. Our brand portfolio is growing at 45%. Megamart is growing at around 8 to 10%. So overall our brands and retail portfolio is growing at 30%. And we are confident that going forward in the next year, we would be able to maintain this kind of growth rate, and our margins are also improving, as you are rightly saying. Of course, Q1 would see a dip because usually Q1 is the lowest quarter for brands and retail. But we are very confident that the next year should see substantial, almost 30 to 40% growth in our overall top line, and we should be able to get a double-digit EBITDA number for that brands and retail portfolio.
Okay. Any further capex plans that you have put in, especially in garmenting, Mr. Lalbhai?
As I was telling you last time, that we are setting up around 12 million garment new capacity. So that would be coming up in Gujarat and in Karnataka. So that is the kind of growth we would see next year.
And that will start hitting the P&L in FY15 itself, or the full year production?
Yes.
When does production start there?
It's likely to start in Q1, so it should stabilize in Q3. So the real benefit should be in Q3 and Q4. But the production would start in Q1 because we are already, the construction of these facilities are already underway, and they should go into production in Q1.
All right. We'll leave it at that, Mr. Lalbhai. Pleasure speaking with you. Thank you very much for joining us.
Thank you. Thank you.
All right. That's Arvind Mills. Good performance and registered by the stock markets.
And very confident too, the body language of the management.
Oh, absolutely. And that's been the case for the past three times that we met him, at least I think since October. It's not just rupee depreciation, it's also improvement in markets that is clearly helping the export sector. We have to take a break on that note, but now we focus from the markets to larger issues confronting the economy and election round the corner. We have senior BJP leader and former finance minister Yashwant Sinha joining